They compared humans with a whole bunch of different animals, and this study basically computed that the human was like nowhere near the top of the list as being efficient in locomotion. The most efficient animal was a condor. However, one of the researchers in this decided to also compute the efficiency and locomotion of a human riding a bicycle, and that vastly outperformed the condor. Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Good. Let's start. We're gonna try to finish the chips history today, so I'm gonna try to skimp on exhibit CB&A. Not too much commentary on supply and demand. Just I know I say this every Wednesday, but these numbers show demand only going up by 500,000 barrels a day. Shows China flat, other Asia flat, see China down a little. And with 3.5 or 4 barrels of surplus capacity, something's got to give. And the price would be lower than 65, except there's the expectation that there'll be more activity in the Middle East. That this meeting in Oslo starting Friday with the Iran foreign minister and, a delegation from the U.S. will not amount to anything, but we'll see. On pricing on the bottom of Exhibit B, oil is holding up pretty darn well, considering, and gas is doing well. And the only concern with gas is that power line on demand has been going up 1.5 Bs a day per year, and it's not doing that this year. On the other hand, LNG, which is flat in 24 versus 23, is up a full 2.5, and will go up again next year. So demand looks good. The key is dry gas production, which is holding in at 106, no more than 106. And this 26 forecast has it going to 108. I mean, this should mean that gas stays in the $3.54 range. But remember, gas was $6 in 22, and then declined all the way to $2.40 in 24. So $6 was the invasion of Ukraine and needing more LNG and whatnot, so it was overdone. But my goodness, $2.40 was a really low price in 24. So Exhibit A, we talked last week, it has the deficit coming down to $1.5 trillion from 1.93. I think it's a reasonable forecast. It'll help enormously in the U.S. bond market and the market for U.S. dollars. The Trump administration can pull that off. It does benefit from some tariff revenues, maybe 200,000 additional or 200 billion additional tariff revenues, which seems likely 26 versus 25, and that'll be a terrific result. Anything more, Mike or Jason, before we get into chip system?
No, let's go for it. We have a special surprise for you guys. For the first 3 minutes of chip history today, we have a special guest speaker that's going to go through kind of the overarch of what happened with GPUs. And from there, Jason and I will kind of comment on it and let you know what we did. So here we go. Tune in.
Remember the first time you fired up Doom or Quake back in the 90s? The screen exploded with demon hordes and rocket jumps, and suddenly your beige box PC felt slow. Those games were so visually ambitious, they bent CPUs to their breaking point and sparked a race to invent faster graphics hardware. That spark lit the fuse for everything we now call the GPU revolution. Gamers wanted smoother frame rates, modders wanted bigger explosions, and developers wanted worlds that felt real. Early graphics accelerators offloaded math the CPU couldn't juggle, turning texture maps into living corridors of lava and metal. But in 1999, Nvidia dropped the GeForce 256, the first chip bold enough to call itself a GPU, graphics processing unit. With hardware transform and lighting on a single die, it didn't just draw pixels, it understood 3D space. Overnight, game studios rewrote engines, and players watched polygons become characters. Fast forward to 2006. Nvidia releases CUDA and asks a provocative question. What if these thousands of tiny graphics cores could solve other math problems? Suddenly, scientists were using gaming cards to fold proteins and simulate galaxies. GPUs had crossed over, from drawing monsters to decoding the universe. Then came a contest most gamers never heard of, ImageNet 2012. A neural network nicknamed AlexNet obliterated previous image recognition records, running almost entirely on, yes, GPUs. The jump in accuracy wasn't incremental, it was a cliff. Researchers realized that parallel cores built for shading dragons were perfect for training deep neural nets. The AI gold rush began. By 2018, a paper titled "Attention is All You Need" introduced the transformer model. Unlike earlier neural nets, transformers could pay selective attention to vast amounts of data all at once, an idea tailor-made for GPU parallelism. Language models ballooned from millions to billions of parameters, and Silicon Valley's appetite for GPU clusters went supernova. Inside NVIDIA's labs, the DGX supercomputer packed 8 top-tier GPUs into a single black box. One of the very first units landed in the hands of a research team determined to teach machines to talk. Stack enough DGXs together, sprinkle in transformer magic, and you get a conversational AI prototype that would soon be called ChatGPT. November 2022. ChatGPT launches to the public, and it feels like the internet gains a new being overnight. 10 million users arrive in 4 days, asking everything from homework help to business plans. Each prompt triggers trillions of GPU calculations sprinting through cloud data centers worldwide. Graphics chips, once judged by how many frames they could squeeze out of Quake, are now measured by how eloquently they can finish your sentence.
Okay, so you probably figured it out by now. That was an AI voice. And the script that she was reading was also AI generated. Now, I had it include a few of the points that I believe are really important in the history of the arc of GPUs, but we did that to demonstrate just where this technology's gone. I mean, it's amazing how realistic the voice is and conversational the tone is, and amazing how the script can be developed in a way that is not just factual, but also something that is kind of meant to be listened to. What do you think, Hunt?
I'm impressed. I want to draw Jason out a little. Jason is taking a view, which I'm very comfortable with, that language models are software. That we're not talking about sentiment beatings. We're not talking about science fiction scenarios where the language models, or whatever they're called, take over. But over to you, Jason. You're still holding firm to that position.
Yeah, and how you define general intelligence, I don't know. It's like a philosophical question I keep grappling with, but ultimately these language models are they're statistically picking groups of words that fit together to make intelligent thoughts, and they're really good at it. I guess a couple points from the history of GPUs that really stand out to me is initially it was these 3D games that kind of spurred the need to perform hardware accelerations. You're doing a lot of calculations to figure out the shape and color and size of a polygon. It's a lot of math computation. And it was really eating up the CPU because every frame has to be recalculated. They pushed all that to a specialized processor that ended up being called a GPU, graphics processing unit. It freed up the CPU to do the other tasks that the computer needed to do. and specifically for gaming, like it made the decisions of what the character was doing versus rendering all the graphics. The big thing that changed was in 2012, that ImageNet competition. And that had been going on for a couple of years. And what it was is competitors were given a set of images, just JPEG computer images. They were things like cats, dogs, bikes, cars. And then you had to train an algorithm on those images that then got presented with a set of competition images that they hadn't seen before. They weren't in the training set. And then the algorithm had to correctly identify what it was looking at in that picture. I don't remember the specific, accuracies of them, but it wasn't very good until 2012. One team used CUDA to program an Nvidia GPU to perform this task, and it was just a step change better.
Yeah, I forget the numbers, but I think it was like going from like 55% to 80% accuracy. Like it was a huge improvement.
Yeah. And oddly, like the goal is to reach human parity of them recognizing images, and that wasn't 100%. I don't remember what it was, 98% or something. And this got a whole lot closer to it. And then that next year in 2013, every team that submitted an entry into the competition was using an NVIDIA GPU.
And frankly, like this was the spark that we recognized when Jason and I started our first company. And computer vision was this new burgeoning field, and using GPUs for that purpose, I mean, it woke us up to the fact that CUDA was the most important software library for that purpose, because basically everybody that was anybody developing models for computer vision was using NVIDIA and CUDA.
And as the AI narrator alluded to, it wasn't developed for AI specifically. It was to do things like weather modeling and physics simulations.
Yeah, the weather modeling is a great example. And a lot of people on this call will have a sailing background. So if you've ever done an offshore race and you download those grid files, those grid files are basically geographically boxed areas where a prediction for a given period of time of what the wind speed and direction are going to be. The computers that compute those are typically giant supercomputers. And because each one of those tiny boxes, especially if you're going to do the whole globe, because each one of those tiny boxes are essentially requiring a parallel computation, it is exactly the perfect scenario for an embarrassingly parallel processor, as a GPU is. So yeah, it was definitely the researchers that picked up on that early in 2006, but making the bridge to the ImageNet competition really opened things up.
Yeah, so GPUs are really pushing Moore's law today. CPUs kind of plateaued in performance several years ago, and you really started to see that when laptop makers would start advertising dual core processors, quad core processors. That was really attempts to parallelize that CPU so you get more compute capability. And then a GPU is kind of that thought taken to an extreme. You're parallelizing a lot of these, well, now they call them tensor cores, or graphics processing cores. So you can do a lot of calculations in parallel versus just a single CPU.
So we should tie this back to Hunt's question is, so Jason, do you believe that the future is going to be AI as a tool that humans use, or is it going to be autonomous tools that run and do their own things? Or is it
we're going to use them. We're going to use it. We're going to have to tell it what to do. I don't think it's going to, we might be able to give it a very high level task, just as you would, an employee or someone, a child. And it will create a plan of action and do that for you. But I don't think it's going to be an autonomous being thinking of things to do.
It's a really good question, because basically what's happening today, and if you look at all the big tech companies, there's a couple of the companies are going in very different directions. And just yesterday or today, Ben Thompson had a article about this. It basically characterized the Apple view of the world is there's a very famous Steve Jobs interview where he describes a computer as a bicycle for the mind. And the concept for the bicycle for the mind boils back to efficiency in locomotion for animals. And they compared humans with a whole bunch of different animals. And this study basically computed that the human was like nowhere near the top of the list as being efficient in locomotion. The most efficient animal was a condor. However, one of the researchers in this decided to also compute the efficiency and locomotion of a human riding a bicycle. And that vastly outperformed the condor. So the inference is that Apple at its core, and Steve Jobs at its core, viewed computers as this bicycle for the mind. And that is sort of synonymous with the Apple platform and how the apps all sit on it and how they could be perfectly happy with these AI agents, ChatGPT, Gemini, whatever, running on its device and thinking that they don't necessarily need to have or own one of these. And then there's the other side where you have Meta and ChatGPT and XAI are pushing for this super intelligence concept. And essentially the idea there is that you're going to have a system that will iteratively get better on its own without input from humans. And that distinction, it's a theory. It's not something that has been proved yet that that's even possible. There are tighter loop systems that are able to do that, but things that are broadly capable and broadly able to accomplish new things, there's not a lot of examples of that. So we're at a very interesting juncture when it comes to the direction of software technology and obviously demand for GPUs.
Jason's been very critical of Apple and their software capability, but I think even Jason might agree that we will still be buying our iPhone. What are we up to? 17 now. We will still be doing 19 and 20, and that Apple will be the instrument that we use rather than this piece of hardware that Johnny Ive, his former head designer at Apple, is developing for OpenAI. Now, in thinking this over and putting this forward for Jason's comment, I'm very interested in what Jason might think. I think that Apple has a vulnerability against another piece of hardware that is better at accessing language models. I keep picking on Jason. Over to you, Mike. What do you think about that outcome?
We take for granted today that everybody must have a phone. And it is true, if you look at Apple, maybe since Steve Jobs left, there's been less new product innovation. You could look at that as an investor and say, well, no, the returns on the stock have been phenomenal. Cash flow has gone, it's up in probably an order of magnitude and over that period of time. So the business is very good. The downside to being a hugely successful company like Apple is that you end up having to make very difficult trade-offs if you want to go down a route that might be disruptive to your existing business. I think that, and you can infer with Johnny Ive leaving that maybe Apple is less willing to take risks than they used to be. And for investors in Apple, that's probably fine, but it may mean, that they miss the next big trend, which we've seen happen with most largest companies, the previous largest companies in the world. They don't sustain their position as the largest company in the world for good reason. Generally, it's the smaller, scrappier, willing to take more risk company that it's going to be there to beat them.
I think they have an advantage because the iPhone is a computer in your pocket, and I don't think we'll get away from having to carry around a computer. The challenge with adoption for headsets and AR glasses is that you can't fit the computer into the frame, or you want the frame as small as possible and as light as possible because you don't want to carry it around in your head. Same with AirPods. So I don't think we're going to get away from having a computer. And I think Apple has an advantage where they are that computer and they're working on headsets and glasses, and that could be the future of displays. But whether they produce that or not, they're going to be the platform where the apps all run, unless it gets really disrupted. And Johnny Ive's plan doesn't sound like it's that. I mean, we don't know what it is, but if it is something that he said you set it on the desk. I've heard that at least, and we were theorizing it's some sort of voice assistant, but I mean, I don't think you get away from having a computer. I can give you my long-term vision of what a computer looks like, but we've had this idea that, and it ties into the history of CPUs, is that the CPU progression has plateaued. Mobile processors are becoming as powerful as it's converging to the strength of a laptop processor. And Mike figured out the other day that his iPhone 16 is just as powerful as his last generation of his MacBook. So when that convergence it's nearly there. The technology's kind of in place now where if you just plug an iPhone into a monitor, it could be your desktop computer. They have devices already today that they're projector keyboards. So it's a little device you set on the desk. It uses laser projection to put a keyboard on the desk and haptic feedback when it monitors your fingers if they touch a key. So really, if you set your phone down, maybe your phone becomes the trackpad. You have this virtual display keyboard and AR glasses, and that's your computing platform. Apple should build that.
Yeah, the question really, the real question is artificial intelligence, is this whole transformer model, large language models, is this disruptive or is it sustaining for the incumbent tech companies? And we've yet to see anything that would say that it's going to be disruptive. We think it's going to be disruptive in software, for sure. Purely software companies are in a more challenging position. But for hardware software companies, it is incredibly sustaining. And if you're an incumbent in an industry, it's very, very sustaining.
And a lot of the talk's been about how we push that compute to the end user, to the end device. So if you don't have to do all the LLM calculations in a data center, and you and I all pay for the electricity that we charge our phone with, that's the goal. So they'd love to have the compute pushed down to these end devices.
Yeah. Maybe that's what Johnny Ive is striving for. Look at page 1. This is really relevant to the discussion we've been having, because the two that are being challenged are Apple, because they, will people have a device other than an iPhone? And Alphabet or Google, will these language models replace search? And you can see it in the market valuation. Apple was trading at 31 times free cash flow, which is about a 3% free cash yield. And Alphabet's about in the same range. Normally, these types of businesses don't get down to that level. For example, Microsoft, which like Nvidia is pushing $4 trillion, where Alphabet's $2 trillion and Apple's around $3 trillion. Microsoft is trading for almost 50 times free cash flow. They're perceived to be less challenged by language models that apps will, be like run as part of the Office system, like Copilot. So that's a judgment the market's making. If you turn all the way to page 3, and you get Nvidia. Now this is backwards looking. Admit it. This is the historic level of free cash flow in Nvidia. It's remarkable. I mean, it's $67 billion, which ranks well with, on page 1, the largest free cash flow is Apple at $100 billion, and then second largest is Microsoft at 76. Those companies have lots and lots of sales. Apple has 400 billion of sales. Alphabet has 360. Microsoft has 280. Nvidia, and as I say, this is a historic number: 130 billion of revenue, 67 billion of free cash flow. Most people would say having that free cash flow margin, where you're bringing more than half of the revenues down to free cash flow is impossible. But look at that free cash flow multiple. It's 57 times. Do trees grow to the sky? And on the other hand, when you cite across page 3, AMD's been kind of left in the dust. Intel is struggling along with lots of negative free cash flow. The company that you couldn't do, that none of this would happen without, is Taiwan Semiconductor. But of course, you have some political risks there. Your value, overall equity value for Taiwan Semiconductor is only $1.2 trillion. But still, because of their CapEx program, it's trading for 60 times free cash flow. So it looks to me like the market has pretty well recognized the trends that Mike and Jason have been discussing.
Yeah, I think you're right. Because when we first started buying Nvidia, it was 20 times free cash flow all day long. And it's been a while since you could buy it there. Okay, let's take a quick break for a message from Oakcliff Sailing.
Hello, this is your weekly update from Canada. I'm at the Royal Nova Scotia Yacht Squadron, which is a beautiful old club. They're setting up for a party, and if you look down here, they've managed to extend the docks since the first time I was here. So almost everybody is on the dock. We have Temptation, which grabbed line honors and won or beat the record, so we are now the record holders of 3 different races around Long Island, the Bayview-Mackinac Shore Course, and the Marblehead to Halifax. Who knew for a nonprofit? The kids on Far 40 Blue came in with smiling faces and pretty exhausted. As a matter of fact, it's 11 o'clock here, and they just woke up. I guess that's what teenagers do. And finally, the Curve 50 Redwood Oakcliff won ORC 1. So that's all great. I'm, unfortunately for me, but it'll still be good, I'm flying back today and leaving beautiful, sunny Halifax Harbor and going to speak to the kids in Marblehead Harbor tomorrow. And then later on in the afternoon, I'll be in Salem doing a fundraising event for Ascend, which is a group that uses mountain climbing and rock climbing to empower women specifically from Pakistan and Afghanistan. So world traveler here saying happy Wednesday, and I will check in with you later. And if you happen to be in the Midwest, say hello to OC 68 with Ethan Johnson and a full boatload for the Bayview-Mackinac starting on Saturday and next week's Chicago-Mackinac. No rest for the weary. See you later.
And now back to the show.
We're down to 3 or 4 minutes. We've got to do healthcare, Jason. Anything, the news?
I've only got 2 quick things. Last week, Sentient, an insurer on the state marketplaces, they withdrew their sales guidance for the year and lowered their profit expectations. They said their plans that they're selling in 22 of their 29 markets are much less profitable than expected. And largely that's due to the population of patients they're insuring are not as healthy as they expected. That's a trend we're seeing. It's something United Healthcare said last quarter. So it's interesting that multiple insurers are seeing that, and they took a pretty big hit to their share price because they're forecasting their earnings to be cut nearly in half. So that's something we're watching. And the other thing is from today, Trump clarified some statements he's made on the tariffs for imported pharmaceuticals. He said that the rate is 200%, but they're going to give these companies a year and a half to onshore manufacturing. A lot of them traded up today on that news. They have a lot more runway to figure this out than they thought they might have. And a year and a half from now is midterm elections, so no one knows where we'll be then. We heard a little bit of anecdotal evidence about the Jernavix rollout for Vertex. Also, there was a outpatient surgical center that was reporting on it. They have moved, I think, entirely to Jernavix off of opioids, and they're seeing really good results with their patients. No one's complaining about not being treated. Their breakthrough pain treatments, supplementing it with acetaminophen and like essentially high strength Tylenol. A lot of their surgeries are joint repair. So a lot of the patients have to go through physical therapy. And another thing they said is those patients were performing better in physical therapy due to not having side effects from opioids, such as nausea or fatigue or just alertness. Positive signs on the rollout. I think prescriptions are going to be slow to tick up just because everyone's trying to figure out who's going to pay for it, how they're going to pay for it.
I know, Harrow, you have to pick a health stock. You're kind of more positive on Harrow relative to its current value than Lantheus or Vertex or Pharmaceutical or others. Any news on Harrow?
No news. Hope the sales team's just trucking along there.
Yeah, we think. I mean, we're really not going to know anything till the next earnings.
I mean, you really like the management, which helps enormously when you fasten in on a stock. You think this management is really experienced. They've done it before, and they've got good motivation.
That's right. It's an owner's mentality that is hard to replicate other than owning a very large chunk of the business.
Yeah. Yeah. Have we officially finished chips?
Yeah, I think so. Jason pointed out that we didn't spend enough time on mobile, but I think we could wrap it up and move into software.
And is it true history of software? We're going to go all the way back to punch cards.
Oh, we better.
Yeah.
Well, maybe we'll start with AI. 1950s era. We'll touch on AI in the 50s.
Well, and yeah, exactly. And, you know, the history of software is going to have to include Trudeau and Trudeau's position that Jason's stance, which I'm very comfortable with, is that these language models are basically software. So we'll try to have the history of software not take quite as many weeks as the history of chips did. In the meantime, everyone be well and stay healthy, and we'll be here exactly 7 days from now. Take care.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.